welcome to today's session. So we're talking about change of character, market structure shifting in the way it wants to move, right? So today's topic is majorly on change of character. What do I mean by change of character? Right? So change of character, or popularly called CHOCH, right? CHOCH, right? This is change of character right here. What do I mean by change of character? It's just continuation from the last class that we had on market structure, uptrend and downtrend, right? CHOCH, change of character. What do we mean? Remember, we said that in a bullish trend to be established, it must make higher highs and higher lows, right? This is a bullish trend, and we said that listen to this theory carefully. Right? Whatever I'm saying right now is very, very important, and it will actually help you, right? So we said that this is our higher highs, HH, and we said that this is our higher lows. Then we said again that this is our higher highs, and we said that this is our higher lows. So we said that markets will always move in this kind of structure for it to be called an uptrend according to the Doe theory, right? So like I said before, we always buy low and sell high. So basically, where you should be buying from are this zone. You have to buy at the higher lows. You don't buy at the higher high. You don't buy when price is expensive. You buy when price is actually cheap. That's how it actually works in trading, right? So you buy low and sell high. So what do we mean by change of character? So let's take for instance now, in this uptrend, market is actually following suit of these higher highs and higher lows, Now, change of character actually means the market actually shifting from a particular trend to a new trend, right? Market shifting from a particular trend to a new trend. And how does market actually does that? Is by the word, or by the explanation, change of character. Now, this is what I mean by change of character. Now, for a market to actually continue pushing bullish, it must be breaking highs. Take note, for market to continue pushing bullish, it must be breaking highs, which means that for a new high to be created, it means that it has broken a previous high. Now, let me explain. Before this higher high was created, there was this higher high right here, right? And this higher high was broken, yes or no? It was broken. That's why we have this massive buys right here. So if market should continue in this direction and be pushing bullish, it must break this high right here. It must break this higher high right here and continue pushing bullish. Break this high right here and continue pushing bullish, and just like that. But a scenario where markets cannot break the higher high, right? We have something like this, a new trend. Take note, a new trend. A situation where markets can no longer break the higher high again, because like I said before, for a higher high to be established, it must break the previous high. That is what we are seeing right here. Before this higher high was created, right, there was a break of this higher high before we started having this one, and market will just continue pushing like that. But a scenario where market fails to break the higher high, it leads to what? A new trend, giving us what? A change of character, or a shift in market structure. You understand? But the most popular word is change of character, right? Or a shift in market structure. Because definitely market, like I said before, will not be moving in a particular trend for a long time, right? After some time, market will shift trend from a bullish trend to a bearish trend, or for a bearish trend to a bullish trend, right? So in that process, or in that vein, right, we can actually call this our supply area, because basically this is our supply area that market actually sold off from. Take note, this is very important. This is our supply area that market actually sold off from. So if market should be pushing bearish, right, it should be what? Forming another lower low and lower high. After it has broken this, it has changed structure, it should be forming a newer trend or a newer structure in the form of lower lows and lower highs. So basically this is our lower low right here. This is our lower low LL, and this is our what? This is our lower high. This is our lower high, and this is our lower lows again. Lower lows, and this is our what? Lower highs. Lower highs. So market what has to move in that from that bullish structure to a bearish structure, right? And once you start forming that bearish structure, you have to see the formation of a lower lows and lower highs, right? And let's say for instance now, after you have seen the lower lows and lower highs forming, right, you know that what you have to look for is selling opportunities. So in this kind of market, what will I do? I will not just start selling. I will not start selling here. Selling at this place is wrong. Trying to sell here is wrong, right? Because market is at the lowest. You cannot be selling low. So you have to wait for a high. So the high can form like this, then you enter for a sell, or the high can even go to the extreme like this, and you look for selling opportunities. But as far you know what you are doing and you understand structure very well, this should not really be an issue. Now let's look at another example again, right? Let's say market was in a bearish trend before, making lower lows and lower highs, right? Lower lows and lower highs. So market actually got to this zone. Market was supposed to break this zone to continue pushing bearish and continue forming the lower lows and lower highs. But fortunately, market got to this low, failed to break this low, and started reversing up, forming a new trend or a new structure called higher highs and higher lows. Right, this is what we mean by change of character. Right, change of character. So, like I said before, every turning point you have to mark it, and this is actually our demand zone on the market. This is our demand zone on the market. So, if you want to basically trade this kind of market, it's very, very simple. Right, when you want to catch a reversal, because in trading you're either catching a reversal like this, or you're catching a continuation, like a continuation of an uptrend, or you're catching the beginning of an uptrend, or you're catching the beginning of a downtrend. So the beginning of this uptrend, right, is actually from here, from this point here, where market actually started reversing from. So this is your where you can catch a reversal from on the market and even hold the trade all the way up. So without wasting much time, I believe we have gradually understand what I'm talking about. So let's go to the real life chart to actually see, right, if this actually played out to what I'm actually saying, right? So a very popular example that we have actually used before is the USD Canadian dollar, right? I believe we have actually looked at that pair before, right? And I love the price action that it has done before. So let's look at it closely. Let's look at what market actually did. Alright, let's look at what market actually did. Now, this is USD Canadian dollar, and first of all, look at this right here. Look at this right here. Now, if you look at this closely, we have a bullish trend. Now, how did market actually move from this bullish trend, to a bearish trend? It's just by what I just showed you guys, right? And you can see how market shifted to a bearish trend, right? I think there's too many lines on my screen. Let me delete some. Now listen, right? So look at the market was first in a bullish trend before, because obviously this is what a higher low, a higher high, a higher low, a higher high, and a higher low. But market was supposed to break this high, so that it can be continuing that higher high, higher low. But unfortunately, market got to an area of supply, and when it got to that area of supply, what did it do? It dumped massively and was forming a new lower lows, lower highs, lower lows, lower highs for you. So you can see that The market that was in a bullish trend before or in a bullish structure before is now in a bearish trend or in a bearish structure, right? You can see how market has just shifted trend. And if you want to catch this trade, it's simple. You can see my annotations right here. If you want to catch this trade, it's very simple, right? Remember I said that this is a supply area. Market has tested this area before and sold. So if market should come here again, what should you expect? A reaction to that zone. And if I zoom in closely, the candlestick actually aligns in our favor. The candlestick aligns in our favor. So look at the way the candlestick are doing. If you have gone through the candlestick Bible, you should be familiar with some candlestick rejections at a particular area. So if market or the market wants to reverse from a particular area or zone, there's going to be what? A rejection. And that is the first sign we are seeing right here. The candle pushed up, that's the buyers took price up, but the sellers rejected it and started pushing down. That was number one sign that market was about to reverse from this zone. Number two sign was the formation of shooting star candlestick. Remember, shooting star is a reversal candlestick. A bearish shooting star is a reversal candlestick that you can use to actually use as a signal confirmation to actually short the market. So if market should get to the supply area or your demand area, right, you can use the shooting star, right? Then for the demand area, you can use what? Bullish hammer, bullish pin bar, bullish engulfing candlestick as your candlestick confirmation. So remember, there's a way the market will actually react at a particular zone if it wants to sell, and that is what you are just seeing right here. Because if you look at this closely, if you look at this price action right here, this is the 4 hours time frame. And what does it tell you? Market was actually around this zone for days, because this is the 4 hours time frame, which means each candle you see right here actually took 4 hours to form. So if you count it right here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candlesticks appear on that 4 hour time frame, right, at the same time in a range. It was just going up and down, right? Market was just stalling at that zone. It was neither going up, neither coming down, right? So what does that tell you? Market is about to reverse, and that's about 4 hours times 13. That is a whole day, 26 hours, right? 26 hours. That's a whole day that market actually took and played around this zone for a whole day. It shows you that the bears are not allowing this market to push further up. And if you understand price action closely, you know that you are to short this market, you have to sell this market. And it's simple. If I want to take a trade right here, I'll just take a sell right here, put my stop loss beneath, or rather above this zone, and target at least this zone or this recent low right here, this recent low right here. Now this trade is actually a 1:3.78, which means that if I'm risking $10, I'll be making $37.8. If I'm risking $100, I'll be making $378 if I actually took this trade, right? Because a very nice trade that market actually respected the structure and shifted structure from a bullish structure to a bearish structure. That was a nice trade on USD CAD, right? If you're risking 1%, you're making 3%, and that's how your trading ought to be, right? You cannot be risking 1% to be making 1%. In the long run, you are going to fail. But you have to risk 1% and target 2 to 3% as your return on investment, right? So looking at it closely, you can see that the market is still pushing bearish. You can see that the sell was still happening again. It did not just stop right here, stop right there. You can see that it's still sold again, right? Because it's trying to form a new trend, a new structure. You can see the sell did not just stop right here, it still sold again. It sold again, and still give a lower high formation right here, sold again, gave a lower high formation, sold again, gave a lower high. So all the lower highs, you should be taking note of these lower highs, because definitely market will create an opportunity for those that miss the early sales So if you could not catch that first sell opportunity, that is this one right here, market has created another opportunity for you again, for you to catch the sell opportunity. So if you miss out on this one, don't miss out on this next one. And if you miss out on this one, don't miss out on this one actually. This one actually, right? Because the market is actually creating those lower lows and lower high structure. And that is how you can be getting opportunities each day. Let's say I want to trade USD card, for instance, right? I'll just be looking for the lower highs formation and be shorting USD card. Once I get a good lower high, I will sell. Get a good lower high, I will sell. Because why? The structure and the trend is bearish, and we now have a new structure. We are no longer buying, but we are looking for what? Sell. So it will be easy for you to trade this kind of downtrend than a sideways or ranging trend. You understand? Because definitely you know what to expect and you know what to do. It's just for you to look for a lower high and sell. Look for a lower high opportunity and sell like that. So this is for the sell scenario. Let's look at another pair again that actually did for a buy scenario, and that's on GBP USD. Alright, GBP USD. So let's look at GBP USD charts and look for more examples that market actually shifted structure from a bearish to a bullish. Now we did from a bullish to a bearish. Now let's look at a bearish to a bullish structure, right? Very, very important. So this is GBP USD on the 4 hours time frame. Remember, I do my analysis mostly on the 4 hours time frame, right? So that's it. So now look at GBP USD, for instance. You can see that this was last year data though, but I will still pinpoint this year data. Now if you look at GBP USD closely, we were actually in a bearish trend because we had this lower low, lower high, 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 lower low. Market was supposed to what? Supposed to break this zone, supposed to break this low right here to keep on forming that lower low and lower high. But fortunately, it got to a demand area that stopped market from actually what? Pushing up, pushing down rather. So this was the demand area, like I told you guys, right? And let's zoom if we have a bullish presence or a bearish presence. Remember, you have to investigate at your reversal zone if there is a bullish presence or a bearish presence. And how do you know that? Is by the way the candlestick reacts at your key zone of interest. So look at GBP USD, for instance. You will see that there is a way the candlestick are reacting. First of all, the market is kind of like stalling. You can see that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 candles in the 4 hour time frame. Now if you multiply times 4 candles, 4 hours rather, right? These are 19 candles that actually opened and closed, right? If you calculate that as 76 hours, which means this market was actually ranging for good 3 days, because 24 hours make 1 day and 3 days is 72 hours. So which means for good 3 days, market was just at this zone. What does that tell you psychologically? It shows that the bulls are not allowing this market to push any further up. They are actually fighting to ensure that they come out on top. And luckily for the bulls, they won the battle and market started what? Going up. Now, remember, based on my experience and what I've observed, the market will not get to a very key area from the higher time frame and start selling once or start pumping up or start buying once. No, it does not work that way. Based on my research and what I've observed, if market gets to a key area from that zone, I don't hurriedly buy. I wait for confirmation and I wait and see how the candlestick reacts, and candlestick formations like this where the candlestick will be stalling at this particular zone. That's what I want to see before I can conclude that market is about to reverse, because market will not just come to this my zone of interest and just make a slash up and be buying. No, market will have to give me an entry point or an entry reason to actually take the trade. And what's that entry reason, right? It could be this stalling at this zone for days. It could be the way the H4 will close. It could be a lot of rejections around that zone. You understand? And they say an engulfing candlestick that shows that the bulls are now in total control of the market. That's the only way I can look into that. Okay, we are now having buy and I'm ready to buy now, or I'm ready to sell now. So you have to investigate first of all if there's a bullish presence or a bearish presence around your key zone. Then observe how the candlestick are reacting to that zone. Each time the candlestick will react or come back to that zone, you see that it got rejected, right? It came back again, got rejected before pushing finally what up. Now you can see that we actually shifted trend and structure. We are no longer bearish again. Let me remove all these buys I took, right? So you can see that we are no longer in a bearish trend again, and all of a sudden market is now forming a bullish structure from a higher high to a higher low, a higher high to a higher low, a higher high to a higher low, and just like that market just kept on buying, right? Remember, this buy will not last long. Now look at what happened. I think this was earlier this year. Okay, yeah, earlier this year. Now look at something. You can see that when market actually came to this zone, right, higher high, a higher low, a higher high right here, then a higher low, that market failed to break this high right here. So there's something that I have not actually mentioned, right? Aside from this being called a change of character, it's usually called an equal highs. Take notes, EH is usually called an equal highs. Why is it called an equal highs? Because they are actually at equal points. The high is actually at equal points. Then if it was a low, it would be called an equal lows. That's what we have right here, equal lows. So the term equal lows and equal highs should not be strange to you. Right? This is an equal low and this is what? An equal highs, because why? They have like a equal highs looking at each other. Let me put it that way. They have equal highs looking at each other. That is this one looking at this one. So they are kind of like equal. You understand? So with that said, right, when we have an equal highs or a change of character, expect a new trend formation. And you can see right here that after we had this equal high right here, market what sold. You have to take a sell opportunity around here and sell, right? But along the way, right, let me explain something again, right? I will go back to that my drawing board. I'm coming. So after we have this lower lows, right, that equal high right here, right, and we are now pushing bearish, right? We are now pushing bearish. That is this lower low, lower high, lower low, lower high, lower low, before market finally decided to change again and start pushing up, right? Let me explain something, right? Let me explain something right here. Now in the market, right, remember I said that we have equal highs and lows, and we have change of character happening on the market. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? So our equal highs or our change of character is when, like I said, when market gets to a high that it can no longer break again, and we start seeing market falling. Now let me explain something again. Aside from that, right, we can have a change of character, and later again you'll see the buy coming up again, something like this, which means this demand area, market is coming to respect it. Now we actually have a change of character, right, because of these equal highs right here, or this higher highs that market are failing to break, right? And we're supposed to have a new trend. We're supposed to have a new trend or a new structure, like something like this, right? Like what I just told you guys, something like this, right? But in another way again, markets may not actually start forming a new trend, but but instead it will want towards respect a particular demand zone and continue the bullish structure. That's why if you want to analyze the market very well, you have to wait for the market to actually break this particular zone, right? That is the recent low of the market, before you start saying that, okay, yes, I want to start selling this market, or I'm looking for selling opportunities. So if market does not break this recent low, then there's no need to sell. So market may start buying from here. After we had this equal highs right here, there's this change of character right here, we may start having a buy again. You understand? Because definitely this is a demand zone right here. So if market does not break this zone, right, then we should have what? A push to the upside. But if market decides to break this zone, then we can start saying, okay, we'll start saying that we'll be having a lower low, lower high formation and stuff like that. We'll start expecting lower lows, lower highs, lower lows, lower highs, and just like that. So this recent low is very, very pivotal to how you read the market at the end of the day, right? So let's say, for instance, now the market was selling lower low, lower high, lower low, lower high, and they got to the equal low right here and could not break this low, started forming the change of character, right? There's tendency that markets may break out, right, and start buying, but in the same structure or in the higher time frame structure, market is still bearish. Yes, take note. And that's by this high right here, this recent low. If market decides to break this recent low, then we can start seeing higher highs and higher lows, just like that. But if market fails to break this zone, right, then what do we start seeing? We start seeing what? A sell opportunity. We start seeing what? A sell opportunity from this zone. Hope you understand. It's not actually hard, right? So this recent high rather, is very, very important to where price going to move. If market breaks it, expect higher highs and higher lows. But market does not break it, which means we are still in structure. So market will still sell from this supply area right here. You understand? And that's what I just want to show you guys. And this is it happening right here. Because there was an equal high right here, but market failed to actually break this zone. If you look at it closely, market failed to break this zone, right? And you can see the movement, although it was giving a lower low, lower high, right? Lower low, lower high, but at the end of the day, it turned out that market was still in that bullish structure and the buys are still active, right? You can see the buys are still active. So we get to see structure moving like this. You understand? So you have to know what you are doing first of all. There have to be a significant break of this high. And if you look at it closely, there was not that much significant break. It just came to that zone and pushed up, right? You can see, like what I was telling you guys, the equal high right here, that's change of character, right, came to this zone and could not break this zone, right? But market pushed up again, came down again, pushed up again, came down again, and actually bought. Reason being that because now see if the market did not shift structure, it shifted structure, but the higher time frame structure is still bullish, right? The higher time frame structure is still bullish. That's why the market actually failed to continue selling. So you have to analyze this thing with the higher time frame structure before you start concluding that, okay, market has shifted structure, let me start buying, let me start selling. You understand? So the recent low and the recent high is very, very important. Like what I said, the recent low and recent high are very, very important to what will influence your trading decision in trying to catch a change of character or equal lows and equal highs of the market, right? If it were for me, I would love to catch my entry from this beginning of the reversal. That's how I basically trade. I like catching my own from the beginning of the reversal, so that after the sell, right, we can, whatever happens at this demand level right here is none of my business. But all I know is that I've caught the sell, right? Then if I see that market is coming back to structure again to buy again, then I look for buying opportunities. Let me show you guys another chart again. That was on USD JPY. That was the trade I shared with my Telegram members, and it was similar to what I am saying. So similar to what I am saying, right? And I think this was it right here. This was on USD JPY, right? So if you look at USD JPY carefully, you can see that it was a bullish, or we're in a bullish trend. Yeah, look at it closely. This is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then when it got to this high, it could not break this high again. What happened? It sold, right? Then when it sold, it did not just sold like that. It came to respect a particular demand zone. Remember, when I explained demand zones on the chart, I said that demand zones are your zones you should be buying from. So if you look at it closely, the market obviously came to respect that demand zone. That was this zone you are seeing right here. This zone you are seeing right here was where market actually came to respect. I can see that when the market came to that zone, what happened is bought. So aside from market shifting structure from a bullish structure to a bearish structure by the indication of this equal highs formation, right? Aside from that, right, we also had market coming back into structure. So if market can respect this zone, then we buy. But if market had break this zone, then we have to sell USDJPY all the way down, and we can be seeing lower lows and lower highs formation. But because market could not break this low right here, this was the most recent low of the market before market actually went up. So market needed to break this zone for us to actually be selling and be selling and be selling. But that didn't happen. Aside from the equal high right here and the change of character, right, we're supposed to see a new trend. But like I just explained before, right, market is still in that bullish structure. So you are not to start selling immediately. Once market sold, that's why I like catching myself from the beginning, right? And what I do is that I target the next low as my take profit area. So in this kind of trade, in this kind of market, right, how you trade this kind of market is simple. You catch yourself from the beginning and target the demand area as your take profit, because you never can tell if market is going to break this demand area or is going to respect it. You understand? So if market respect it, at least you're out of the market's profit. But if market decides to break it, which means you'll be making more money if you are still holding the trade up to that point. Right? What we saw on USD card, it broke some lows and started forming highs. Right? So this is it about market structure, right? And let me show you guys that USD card again so that you see the difference with what I'm actually saying. Right? This is USD card. And that was how market actually, that's the difference between what I just showed you on USDJPY and USD card. Now you can see that when market got to this, like I said before, market got to this low right here, what did it do? It broke it, right? But unlike that one, market actually respected it. You can see, if I want to catch it, like I said before, I'm going to take my profits, my first take profit at this zone, so that if market decides to respect structure and buy, right, I will not close my sell. I'm looking for a buy opportunity. But if market decides to break it, right, as we saw right here, it created a lower high formation and an opportunity to keep on selling. So we had that break for us to start selling USD card. But on USDJPY, we didn't have that break, right? So this is about this is about market structure shifting from a bullish trend to a bearish trend to a bullish trend, and stuff like that. You understand?